All right. So last class, obviously we were talking about confluences, channels, finding the makeup of those channels. Um, and of course, I dropped some homework on you guys, which is, let's see. Oh, there it is. Oh, shit. I didn't see the homework channel, the new one. Okay, cool. That's pretty neat. All right. So yesterday, 11. All right, so today's gonna be a homework day, and then we'll finish off with the confluences. And first of all, I just want to say proud of everybody who has shown up every single day. I've seen some people drop off. They showed up the first two classes and they left. Um, so dope. Great job by everybody in here. And those of you guys who are doing the homework, going above and beyond, great job. Proud of all of you guys. But we're going to start with the top homework. We're going to start with the top homework here, JDub. And again, this is weekly. I'm going to move pretty quickly, so keep up. SKY, perfect. I have nothing to say about it. Perfect points of contact, great deviation, perfect. Absolutely great. Good job. Your 4 hour IBM, I was hoping on the same stock, but it's okay. I should have elaborated. Um, Yeah, I dig it. I mean, obviously you're floating a little bit down here. Maybe bring that up. I like to include the wicks, right? That typically is that wide fluctuation in price that I'm talking about. And so I'll give it the wick, a lot of the times, especially when you're dealing with all-time highs. But otherwise, pretty close. All right, knee, good channel. Yeah, that's good. One, two, three. Then you see the break and shift in the uptrend. And again, just kind of showing you how that works, not just the trend line, the structure. You can see the floor right here that breaks. Pretty good job. And that is the hourly. 15-minute. Okay. I can accept that. Yeah, for sure. You popped up, you gapped up back into control. Now, one of the things that this just told you is that the channel is wider than what you anticipated. Wide fluctuation in price. So think about giving it that floor when you're looking for price targets beyond that. But good job. And if you guys have anything you want to interject or ask a question, drop that in there. Hold on a second. My dog ate my PC. All right. I am delinquent on submitting my homework. I'm plotting the. Okay. Thank you. Can give me a signal? That's funny. All right. And hopefully, by you guys looking at the channels that I'm posting and other people's homework, you guys can get a sense of what we're looking for. Oh, shit. I didn't mean to take that away. Disney 1 minute, for sure. Absolutely. Good points of contact. Obviously, a break in trend. You see the move down overnight. Good. Good, good, good. All right. Let's take a look at this. Getting there, but you missed a whole lot, right? We don't want to cut anything out. Right, we're relying on points of contact. So when I look at this, I see, okay, well, you left out all of this, right, which could be important for this. And honestly, in a chart like this, I would probably take a crack at saying that what is this, AVGO? AVGO. Let's see. Let's go take a look at it ourselves on the week. Oh, well, it doesn't have an S. Okay, so let me show you. When you see that, right? That's a large fluctuation in price. You need to zoom out. You're trying to shove this. You're trying to shove it in there, and I see why, right? I see how you see that. That's good. That's how this starts, right? But overall, on a weekly, you might be operating in something that looks like that. And so I would have much preferred to see something that looks like that, right? Then you can see where you're resting on. Bam. So, yeah. But definitely don't force one where it does not belong. All right, so let's see here. See if we can see an improvement on the 24-hour. Yeah. Okay, so downtrend. Now, I don't know why you left that out, right? I see why. I could see the points of contact, but you have that wick included in that. So I would drop that down, see if you got that point of contact. Good point of contact on the downside though. Really like that. So you're getting it, and then the bottom one is perfect. So great job on that. And what this created is a triangle which pinches price. And again, we don't, that doesn't say anything for us, but that is something where now you could look over the top here. And if you punch up, I would assume if you draw a box right there, that would be in perfect confluence with the top of that. So great job. MasterCard. Yeah, I could take that, but I would drop it down to the wicks and try to include as much price as I can. Okay. So I definitely see what you're doing, trying to include all of those channels. I want one singular channel to envelop price, so you want to track the whole thing. But you're cutting too much price out, brother. I want you to try to include all of that price rather than trying to cut it out. Try to get it all in one area. Again, I can recognize why you're doing what you're doing, but it's not really going to help you. You had the right idea, a right idea on the last one, but let's look at this one. Okay, pretty good, but again, we can't be cutting this stuff out, right? We need to lift that up a little bit. Other than that, though, your downtrend looks pretty well placed. Maybe raise it up just a little bit, so tap tap. But otherwise, you're right there. Just a couple more, a little bit more work, and you'll be up to speed. That's good job. But definitely try and step that up a little bit. All right, let me go ahead and get rid of that. And I got it on streamer mode, so I can't see what your guys' whole names are. All right. Elon's Musk. Let's see how you did. Okay, hourly channel. Pretty good. Good points of contact. Nice. Okay, yeah, so for a short-term trend, for sure. I can see how the uptrend, right? There's a trend there as well. See it? But yeah, good job. Look at the weekly. 1 minute. Oh man, yeah, nice job. Yep, that is true. Nice little channel there. That could be ripped all the way back up there and expanded, right? So you have a smaller channel squeezing you in and a much wider one. But good job as on that one as well. Pretty good, yeah. A lot of the times, and this is what I was talking about yesterday, I'll give it that wick, and a lot of times that will help you identify the target because not every time you have the whole channel in place. But with that being said, yeah, good job. You have good decent points of contact here at the bottom. Great points of contact on the bottom, or on the top. So yeah, I like that channel a lot. 15-minute channel. Yeah, I think when you're looking at something like this, you got to go from the top. So on this one, you're zoomed to in. Start the whole trend, right? Top all the way, because I can see that trend clear as day. Tap, 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 and then you're right up against it. So definitely zoom out. Don't hyper focus in there. So yeah, of course, good job. Sorry, I didn't have time to make a video in between getting off live in class. Will I always widen the channel for a wick if I'm up against it? Yeah. If I'm up against it and there's really nowhere else to go. All right. And then I think you got a 24-hour channel here. Same thing, right? We can't zoom in that much when you have a whole downtrend. You can't just encapsulate, like that might be a trend inside of a trend, and that's useful. But I think what I'm talking about is trying to grab or encapsulate the whole thing. All right, good job. Let's keep moving. I want to move through these as quick as I can. Hopefully you guys are able to take something from this. Same thing, good job, but in this case, where you're at now, I would definitely expand that channel up. You dropped 2 weekly charts. That's okay. Yeah, don't cut that out. Big no, guys. We don't want to cut too much out. I can see a downtrend there as well, so that looks pretty good. But the uptrend, yeah, I would say encapsulate those wicks, but otherwise, good job. Yeah, for sure. Absolutely. Good points of contact. Tap, tap, tap. So, yeah, good job. Another good job. Yep, good change in trend. You see, make a box right here. You go sideways, and that is your change in trend. Break down, go sideways again, break up, go sideways again. You create this really choppy 1 minute trend. So, yeah, definitely correct on that one. Good job. All right, 44th. Let's see what you got. Let's see. So I think with this one, you don't really have enough points of contact, right? I would say that a good way, and a lot of the times what I'll do in order to find that channel, right, that I'm looking for, and that was what, on the hourly. So let's take a look at that. Oh shit, you went back really far. Holy shit. So when you're on the hourly too much, right? The hourly is more focused on the most recent price action. So when I'm looking at the hourly, right? When I'm asking for an hourly chart, I want the something in the most, recent price action, obviously. Now in that, with that, and I guess I can just open this up. If that was true, right? And again, I'm just going to show you guys a little tip here. A lot of the times, and I'll zoom out a little bit for you. So with this, right, I can see the channel up there, but a lot of times something like this, right, is something that I can expand. So I would much rather have price action encapsulated in that, and that works really well. Look at the channel up above. This is XYZ's whole chart. And because you're going sideways, now when you go sideways, you start to look for potential signs. Take a look. You see that? These are signs. These are points of contact that are starting to appear to show you where that uptrend is at. Right? And that could be true even wider up there, but regardless, zoom in a little bit. Too far out. Soundhound 24-hour chart. Okay, like your points of contact there. Uptrend, not so much. Not really digging that at all. You have, like, if you look right there, right there, that's more in trend, where this was a channel in itself. And so you would have expanded that up, right? Whereas you're going off of this point and this point, but where are the other points of contact? So let me show you how to do that correctly. Okay, so from the lows. Okay, so here's what I'm talking about. See right in here, let's kind of backtrack this too. You can see that control, beautiful, right? Now, this is what I mean when I say we expand. Right, we're going to expand that. Now on the bottom, however, that is shifted. You've now lost that uptrend. The only way that you would have to have a big dip down and a big pop back up, honestly, to reset that trend. So that's, I mean, unless I'm missing something here, but otherwise, yeah, that would be my channel. Soundhound, honestly, because, now that I'm looking at it, it does look like something could end up breaking down. Yeah, rejection today off of the cost basis box above. And then a box down below. Charting unrelated shit. Yeah, I can see move to 816. But yeah, looking at this, you have that uptrend And then here, you can see a little channel here as well. So that's where you're, trending. So there is a pop, if you could get above that $10. But anyway, that's how I would do that on SoundHound. So now I will, let me address the downtrend, right? Because that's something that I could probably go and like expand this and start to see like, okay, that's definitely the right channel right there and there. So like that's where we're currently at, and there's empty space up in SoundHound. Keep an eye on that thing. But 4 hour, so that's where I would zoom down, right? And I'm focused more or less on points of contact first. And I can't help but see all of this, right? Now I'll try, and it's okay to not be correct, right? And maybe both could be true. So this is one of those scenarios where while the channel has its a little bit of inconsistencies, I would simply be able to say above 1033, right? Or more or less a punchback over that high. Same thing to the downside where you're waiting a break of 893 with empty. That's actually not a bad little play there. All right. Did that make any sense though? Yeah. See how widening it. I like the live homework review. Okay. I'm sorry, I don't understand when we leave the wicks out. So, um, typically I try not to, right? Okay, so points of contact, right? With wicks, it's points of contact. Your hair looks beautiful. Yeah, you look great. All right. So maybe this probably isn't the greatest example. How do you decide whether it's going to break out or go back into the box? How do I decide whether it's going to break out or go back to the, I mean, I don't decide, but that decision that I make is based off of where the candle closes. I mean, hold on. So how do you decide whether it's going to break out or go back into the box? This is measuring what's above me, right? If you have an immediate box or an immediate resistance, kind of like how you do on the Qs, right? There's an immediate resistance there and you're in a box. That's typically how I'll gauge whether or not something is going to break out, right? And today, now that we're looking at you guys, this is actually where I can show you guys a little bit of how I mark out my confluential targets, right? Because we have that one right there. And then based on the channel that we're operating in, we have this one right here. And both of those, or even the range in between them, is likely where we're going to hit. So that's how one of the ways that I can use that confluential target. But when we're inside of a box, right, sometimes it's best to just let the candle close. Oh, Roger. Okay. So that's one way, is based on, yeah, does that candle close? How does it, because that's all you need to do is you need a candle close on a floor in order to keep moving up. If it's empty space, then I'm just going to take that trade SR and I'm going to set my stop on the top of that box. On sound. Oh, so for like the wick, why would I leave it at, okay. So in this case, right, if I'm tracking that the bottom has more points of contact and it just overall seems cleaner, right? The way that I do this is typically, right? So let's say that SoundHound in fact does bounce, right? It bounces. And I'm trying to pick a target. First of all, I have a weird ass looking box right here. I have a decent little structure right there. So punch, right? And then now I'm starting to see there's a little gap up there. So let's say I take my trade and it busts out of that 1038, it goes to 1068. I trim 25% of that. It goes up, it hits $11. I got a signal to go up and honestly, I have to include this because it is a formidable resistance, 1158. If we take that trade, what time frame is that on? That's a 4-hour, 24-hour chart. So I would have two targets, right? In this case, right, I will expand the channel up to the wick in order to find a confluential target within it, right? Or if we're looking at it the other way, and we have something like that, I'm going to give it, right? And so right now I have that wick right there, and it's kind of cutting that candle off. If we were to break up, right? If we were to resume the uptrend and be back up above 1082 and over 1140, I would expand that channel. That would help me, right? Inevitably find the target or the confluential target above. So pop up, break out, I would be looking right up towards one of these confluential targets. So it's not a, like, you know, you're not going to ruin your trade by having, you know, cutting out the wick, but it is a superior targeting. Like, and I will say it's better for me on these charts, and I'll say this is probably when I use it the most. It's better for me to have, like, you know, say that I cut the wick out right there. That's not going to give me an like, I don't have a bunch of points of contact off of the top. So had this been just a wick right there, me shrinking it down while you can still see the points of contact wouldn't allow for me to see the potential whole trend. And so I use this, right, or I try to include those wicks when the channel resumes or it's starting to move in that direction. So like I typically try to leave a wick. I try to leave all the wicks in. If you have more points of contact on a floor and something wicks down below that channel, that could be an expansion, right? But I'll leave that wick out because I know that we fell out of control but pulled ourselves back in. So points of contact will outweigh any wick if you have to cut it out. And so focus on that. But of course, if you are trying to encapsulate the whole trend, especially on higher time frames, that wick, and I would say that, you know, higher time frames might have more wicks cutting than any of your lower time frames, because like on the 4-hour you're probably going to include all that. All right, let's go back to the there we go. We got a lot to work through, so just be patient, guys. I'm hoping this is helpful. I didn't do this in the last classes. So again, this is an example of, because you are at the controls or points of contacts resistance, I am willing to expand that up to the wick in order to find that second target. Because at that point, the channel is expended. But other than that, you guys got it, right? That's a good channel. Okay, what is this fractal? Okay, I can accept that. What is that? The 1 minute? Jesus Lord. Okay, so I mean, dude, honestly, great job. You know, I see some cuts out of there, but that's okay. Points of contact, this little channel right there, you know, again, bring that back up a little bit, but that's clean, that's crisp. This, all beautiful. Great. That right there just shows me that you know how to identify, which is good. All right, now this one, I don't know. We'll see. So the channel itself, right? And this is what I was just talking about. Like, you wick out, you lose control. That's something where the points of contact outweigh that one wick. Now, if you were to dump down and hit that structure, you know, there could be some form of different trend here, but yeah, regardless. Now this, that's not real. There's typically that an uptrend channel, unless I'm not seeing something on a lower time frame. But as far as I don't really see that. The channel itself is good though. Yeah. Well, I mean, I think this would be like almost a hourly or almost 2 hour, right, chart. Because if I was looking at this on the 4, I might start bam, bam, right? So let me show you what that looks like. So I'm not saying you're wrong. You're not wrong, but for the time frame, I think it's important to have. And what is this on the 4 hour? Yeah. So I see that uptrend, right? That uptrend is a part of what is, and we'll see if this works. I might be off. No, that works. See that? Superior targeting system. Uh, Grandma's boy. Yeah, I mean that's so your uptrend, sure, but that's a lower time frame uptrend inside of a higher time frame uptrend, right? Inside of a higher time frame downtrend. Very good. All right. What the hell? Okay, so I get it, right? I want to stick with one clean channel. Now, that point and that point. So I like what you did. This is the SPY hour. This is June 17th. Ooh, somebody did their homework last moment. Gotta make sure you erase that next. No, I'm just kidding. So let's look at that. SPY 1 hour. Okay, so you have it. I mean, honestly, you could go back further, right, to that gap up. But even something like this, right, that big wide, that's something where you can use, we'll call it the innards, right? So I'm not going to cut that out, right? That is showing you control, at least on that, but that's likely something that's rooted in a higher time frame. But typically, I'm going to expand that channel up, right? So that's actually a tool that you can use to find. So notice how there's very little points of contact. Like we have some on the bottom, but one on the top. When you find control, like so, okay, that's not control. When you find that, right? Clean fucking trend. That's good because now you're looking for those points outside of it. And this is how I find some of those fucking pinpoint targets is by doing this, right? Now, this you can see, is a part of this, which is a part of, hold up, wait for it, a part of that. See it? And last bit, drum roll. Oh, delicious. Does everybody see that? Thumbs up. Was that sick? I was like doing a kickflip. First time in front of your friends. It is. Find one, find the other. What's that little moan at the end of this? Oh my god, Ivan, we're in class, brother. Wild. This is all recorded for generations to come, dude. Your kids could watch this. Bro, it's flirting with the teacher. But that's pretty cool, right? And it's a tool that you can use because who the fuck else would be able to see what you see, right? Who would else like to be able to adapt and conform that channel to show the higher time frame control? And not only that, we just found that by going in here. That little bit just expanded and gave us everything we need to see. So that is the true SPY channel, right? Now, at the moment, you're going to notice something else. We are in, now this is the hourly channel I would have wanted to see, right? We are in this little channel, right? So here's, all right, I'm going to throw this out there, right? The overall uptrend is carrying to the tune of the higher time frame channel, right? But we are still under, and you'll notice as I go back, right? Hold on one second, let me see something. Yeah. You'll notice as I go back, right, it kind of does the same thing. This is your lower time frame channel inside of a higher time frame one, right? So realistically, and it's good the candles aren't really able to be seen, this is the channel, or that is the channel, or that is a channel. Now, you might be asking, how the fuck am I supposed to do anything with this shit? This is where you can look for a lower time frame trend break, right? A lower time frame trend break to identify where you're. So when this little trend breaks, one could accurately predict, right, that you would likely go back here, right? This, and again, this is where I'm looking. If we were to pull back, especially now, boom, trigger, gap, boom, boom, we got a gap down here, right? So you go down, you know, you do all this number, you can't get back up, you've already filled up all your space up here, and then you fall and you break that trend. So that trend is done. And now you're resuming from a lower time frame trend that is broken, right? Because you guys have already showed me how many 1 minute channels break. And they lead you typically, once that lower time frame control is gone, the higher time frame control resumes. So we're looking at this hourly channel to break. And again, this is just a tool that we're using, right? Especially when we found our horizontal levels. And those are still the most important. So that target below with its gap would be the confluential target to the downside, channel based, right? Okay, all channels were in the same time frame. Do you mean to say shorter cycle channels versus? Okay, all channels were. I'm looking at okay, so I'm looking at a hourly time frame. I did zoom out, yes, to show you, but this is something that what I think exhibits lower time, like it's controlling price now intraday, right? And it is overall, like the overall uptrend where we're being controlled is rooted in the higher time frame. So when the lower time frame channel breaks or is, you know, lost control, if that lower time frame, and that's just how I'm looking at it, right? It's like when this channel, or you could just say it this way, when this channel breaks, we would move back in to the control or move back into that higher time frame channel, right? So however you want to word that, but that's what I mean, right? Is I'm using that. It would be the same thing as me using like, okay, well, I'm trying to navigate inside of this channel. Cool. Let's figure out how to do that, right? Cool. So when this channel, right, which I'm looking at going down to hit this marking, you know, honestly, with the points of contact I just left out. There you go. I would be venturing to guess that that gap fill would be your confluential target right there, right? So that 30-minute channel, right? If it is broken or lost, then we would resume or look for targets within the higher time frame channel. So, all right. But anyway, back to this one. Look for that. You got it, right? So what I'm telling you is that you got the first part. You're able to find those channels, now expand upon them, right? Good job. All right. Rice. Rice, baby. Yeah, good job. Good job. Points of contact. Beautiful. Good. By the way, you can get rid of that night and dark, like the yellow and blue in the background. For me, it just irritates the dog shit out of me, but you can just right click settings, um, pre and post market hours background, and I just change it both to black. I would expand that up just, but other than that, yeah, that looks good. Oh wait, did I already do that? Did I already do yours? No, I didn't. Why does that look so similar to the one I just did? Yeah, I did. Did I not? Yeah, I did. Okay. Yeah, there you go. Okay. Sorry, confused myself. All right. So Philo, 24-hour, Roku. Yeah, excellent. Excellent. Good points of contact. Now that could be, see that right there where you get gap down? That could be the top. So don't be scared to expand that channel up to its top. Okay. Tesla 1 hour for sure. Yeah, I actually played this today. Got a great entry on Tesla today. But yes, that is the accurate channel. I used that channel myself this morning. So beautiful. Do you see that cost base, dude? Beautiful. So good. All right. Let's see. Okay, not bad. I like that you marked them out. That's cool. Yeah. No, definitely something that absolutely could expand. Tap tap, right? But yeah, you did a good job. Now that one, not so much. That one, I don't think. I don't know about that one. Maybe. I feel like you have to. What is this, Lululemon on the weekly? Let me see. We'll figure this out together. Yeah, absolutely. So when you listen, when you guys are on the weekly, you can't cut out a lot. You're zooming back. That's something, right, that I would probably include as the actual setup there. Lulu looks like it's about to go on a monumental fucking dump. If I'm being a hundred, yeah. You know what? I don't even think. I think I know. 202.88 is touchdown first. But yeah, that's what I would be looking at. And then honestly, with this, I don't expect it to be a straight line, but I think I could see a move down here, and those could end up being confluential. How are you getting your raise to extend the entire chart? The raise? What do you mean? The channel? This one. It's up to the top. Parallel channel. Oh, extend left, extend right. Yeah, extend. You click on the actual channel after you draw it, and then you hit extend left, extend right. So no way. Is that a monthly channel there? No, it doesn't look great. Yeah, no problem. All right, let's keep going, guys. Appreciate you guys being patient. Goober Dave. Very good. Yeah, I mean, I would say that that is expressing control, but I would rather identify that on a 4 or a like 2 hour chart. Because on the 24, right, on snow, and I'm in snow right now, but on the 24 hour, I would want to try my hardest to identify, and I guess maybe in this case you might not be able to at all. Let's see here. So like I said, yeah, you can include that, and I think maybe even the 4 hour. But here's the thing: if you go to the 4 hour, it shows you a great deal more of detail, and that shows that that trend has actually been broken, unless you expand it, and that's what I want to see. See that? Again, if I can find what you just did, allowed you to find part of it, and I would actually. So here, listen, guys. Trend starts. What is that? What that mouth do? It bounces and it creates the trend. Okay? So you need to be able to go when you're on the higher time frames, right? It's from typically that start or that change in trend. Same thing for the lower. Man, that's a juicy chart. All right. Yeah, listen, this one, because snow contracts are always so expensive, snow contracts or snow has been chopping and it has implemented max paying, which has decreased the price of the contracts. And I'm not telling you guys to do this at all, but I guarantee you that I would make more money than some of these dorks, day traders and stuff like that, straddling it and then playing, whatever direction it breaks. But like the amount of tension here is not well, pretty much equal to. I mean, you start right here and right there. That's 9 days. We've already surpassed that from the top. We're getting close to it. And yeah, average chop session is close to that. 9 to 10 to 15. 15 tops, but that's kind of an average there. And snow, when it does consolidate, typically will give you a bigger move. And then I'm looking at the empty space that we have above us, and I'm figuring, well, that if snow goes up, we're going to hit 226.50, and that's a good target based setup. That would be the target to the upside. And with the amount of consolidation and pressure that it has, even if it was to go down first, I'd still make money. Down if it goes down, and this is something that I haven't talked about enough, but we're going to when we resume the lessons. And that's going to be empty space itself. But I get this question a lot, like, how do I know whether or not something is going to um, bounce, right? How do I know? Because there's a lot of times where, um, you know, you you're moving down, and sometimes you'll flush right through that floor or whatever. Uh, the way you move, right? The way that you move, and one the reason, or if you are creating empty space and you are rushing, like if you guys, I took a trade on Tesla today, and I knew it was coming. I told Manny it was coming. He ended up getting out, but I knew it was coming. Do you guys see how Tesla, and we'll actually go right here. Tesla ended up, and I just want to break off to kind of point this out, but Tesla ended up giving you a really fast dump. It ended up going and hitting a box over to its left, right? If you move quickly, this is a lesson, Ivy, you could clip this. If you move quickly down and you do not close under where sellers control the price, and you don't have anything to, like, if you had a box you built here and then dumped, it would be harder for you to get back up. So when you don't have that above you and you rush down to that, this is what plagues a lot of day traders is like, for me, I held this. I knew it was coming and I wanted more. So press play on that, right? And you don't make it easy, but you fill up your fucking empty space. Do you guys see that? I mean, all of it. You fill it up to the break, chop around a bit. Nobody wants to buy. The empty space is filled. And now, since we have volume above us, watch this phenomenon. Do you see that? That gets me all hot and bothered. Boom. Everybody see that? You don't move fast. And you can't ever rely on the market to do that, right? Majority of the time, any quick move has to be through empty space. Yeah, exactly. But this is repetition in charting, and I'm acknowledging that is on every time frame, Junior. This is a yeah, that is on every single time frame. If you fill up your empty space and you can't grab it, let's look at Starbucks, right? And this is not over yet. It's not over. But what's happening? You fill up your empty space, you tap, nobody wants to buy. You also put in a little bit of sideways action up against that. It's hard to see when you're up there, but when you're down here, you can see same thing. So when we're looking at Tesla, right? Again, we have that major level, and this is actually, yeah, you have to be prepared for this because a lot of people will end up even just panic selling because at the first green candle. I knew, like, okay, earlier me and Bobby, we were playing Contractors video game, um, and it had just hit 318. And I told him, I said, it's going back up. I said, it's going to go back up. It just got to go fill that empty space. If you look and you watch how price action moves, big fast leg down, unfilled space above, you go and you fill it, right? And you fill it in a way in this fashion that's easy for you to fill back down. But what do you hit? What do you attempt to grab onto? Your floor. So if you can, and this is why I have adopted it either works or it doesn't, because you're going to day trade. And I can't tell, this has happened. You guys have probably watched it happen to me. I'm like, nope, I'm not taking profit right here. It's 80% up, it's 60% up. I did not look at the chart and see a big 60% mark when I took it as a warning sign. I looked at the chart and saw a play. And so I'm playing the play. I'm not playing the fucking percentage. And some of you guys who are struggling with holding on to your contracts, I want you to try to flip your phone over. I want you to stare at your chart, because what the hell is your fingers going to do that's going to stop that candlestick from doing fucking anything? Hands off. Hands off. Point A to point B. Drill it into your head, repeat it, mantra, whatever you need to do. How many times are we going through difficult situations, right? Or you're in a fucking basketball game, whatever, and you got to talk to yourself. I got this shit. Nah, fuck that, or whatever. I am still, to this day, in the practice of repeating this mantra to myself over and over and over again. Nah, it either works or you'll hear me. Yeah, La Boo Boo. Straight up. As funny as that is, I mean, it's like, dude, you convince our brains, dude, our brains are crazy things. We're just like dogs, in this way. Our brains, there's a specific part of your brain. It's called the brain. It's literally a brain filter. And it removes irrelevant information and highlights relevant information. And this is a phenomenon that you can see when you go and buy a new car or when you buy a new pair of shoes, mostly the car thing. If you ever buy a new car or you rent a car and you're in that car, all of a sudden you see the same car and you see them fucking everywhere. I drove a Dodge Hornet. I rented one. It's a pretty cool little car. And all of a sudden, I've never fucking seen this car before in my life. I see it everywhere. I see them all over the place. I'm like, oh shit, that's fucking crazy. But that's how, and it's like some dudes, I've had grown ass men be like, yo, that's that foo-foo shit, like, fuck you. Look where I'm at. Look at where you're at, not on some ego shit, but it's like, I have people who are, making less than me, telling me that like, yeah, that shit don't work. I'm like, dude, it does, because when I told myself that I had no other options and that there was something that I saw in these charts and there was something that I knew that I could take advantage of, I lost my mind a little bit. I've told people this story, like Peyton, there's a picture of me somewhere and like I'm in the back office and it's neckbeard status, there's cups and shit everywhere. I've got clothes on the ground. I've got like a makeshift bed for no reason, even though I had a real bed, because I would sleep next to my TV, which was hooked up to my laptop. And I would because I was on the West Coast. And so like my hair is crazy. There's Post-it notes all over the wall. Every single thing that's made of glass has Expo marker writing on it for me writing price targets down, mantras down. I mean, all of those things. But like, even though that was crazy and that was chaos, my mind was focused on one thing. I was going to, what has changed? Not much. I was going to be, this was what I was going to do. And that any irrelevant information, until I was proven absolutely wrong, any irrelevant information, anybody's opinion was out the fucking door. Fuck you. So anyway, if you move fast, you have to pass the baton. So anyway, I worked on a Jeep Compass. I had the dreams about them and saw them everywhere. I mean, there you go. It does, Shane. If you let that so shorter expiration contracts swung into empty space. Monday, Tuesday, you have a reprieve. Like, because you have a little bit more time. After that, you have to be swinging those contracts into moves that you see have triggered by their 24-hour candle closes, or they at least closed close, or the tension's pent to the max. So if you have a shorter expiration contract, you need the move to be from point A to point B, and you need it to happen relatively quickly. And so you're looking, and those aren't something that you're taking. Sometimes there's weeks, a whole week, a week and a half, where I don't take them because I can't see that opportunity anywhere. Or it's few and far between. So if you're taking something, right, and especially with Tesla, like, it's fucking Tuesday, It's Tuesday, so we still have Wednesday, and then really you don't. At the end of the day, Wednesday, you're probably going to see it decay even quicker, because it's basically Thursday. You're going to open up on Friday, but that's where, like, yeah, today I can let that happen. I can let that first 5 minute, and I took it. And this is, let me also say this, Shane. When I took Tesla off of this. Wait. Is it here? Hold on. Let me yeah. So I took Tesla. Let me tell you exactly what time I took Tesla to. And especially being out of the money, took these at 9:37. So it's basically the open. Yeah, it was the open. Right in here. Now, this is one of the most important things to me, your entry. Now, I can explain by the wick, right? The wick goes up, it hits some structure, or hits right around the top there, and then it gets pulled back down. That's that first pop, right? That's 9:30. So you had buyers try to pick it up, nobody can, no buyers, and you fall, right? But also on that second candle, right? This is 9:36. I'm not in yet. In fact, let's go to the 2 minute so I can show you where the candle. That's 9:34. That's 9:36. I'm basically right in here, right? And I did this because candles closing in the wicks, showing that control, which was here, was lost. Now that's all good and well, but the reason that I tried to make sure that my entry, and this is why day trading and scalping is so hard, because your entry needs to be fire. It needs to be with the boys. The boys are the floor, right? That's where I need to be, is at the floor. So if we do come back up and retest, I am protected by that price. Price is going to reject off of my entry. But this is also why taking an entry right here, you would have been cooked. Stop waiting for the candles to start moving for you to start confirming. Having a stop loss is probably more important, because if that stop loss is rooted in what's technical and what is on the chart in front of you, the floor or the ceiling, something solid, then you have backup. Then you have, for me, I feel safe, right? Yeah, it is. It's just weird for the recording. There we go. Um, mathematical. Sorry, what did I say? Yo, what the fuck is Put Brothers talking about? The role of mobile missile platforms in defense. What? Boy, turned into the news, dude. No, I just saw. Yeah, I am. Listen, I'm not your quintessential teacher. Okay, bud. Thanks for the quick propaganda, Bob. Sorry about that. I just was like, Put Brothers came up, and then it said like it was talking about two things. I was like, what the fuck is he talking about? He must be going two different routes. I don't know. Shout out to him. Uh, yeah, right. All right. So where were we? Yeah, talking about empty space and how we move. So, all right. Anyway, make sure your entries intraday are situated close to or around something that makes sense. My entries suck. How many of you in here have a trade tracking or like a is it Trado? No, that's not it. There's TradeZella, but I fucking hate the guy who owns it. I don't want to give him any business. I think there's some free ones. TraderSync. Yeah, Traders Inc. Try that one. Stonks Journal. Yeah, any of these. Do it right now. Go do it. Seriously. If you need to be able to see where your entries are at. So I piss you off. What did I piss you off for? What does PMO mean? Oh shit. I'm not I'm old, man. Sorry. I'm just over here guessing. All right. Oh yeah, you'll see yourself in a way you haven't seen yourself before. All right, Junior, let's take a look. INTC 24 hour. I feel like I can't see it all, but I feel like this could be. set down on top of that, you're kind of floating a little bit, but I don't have anything else to go off of as far as, let's take a look actually. What time frame was that? 24. Oh wow, so you really zoomed out. Okay, let's see. So now I have a little bit more context. Okay, so I have to admit, that's got to be real, right? Yeah, that's real. That's real. That's real. So I have to say, yeah, I think I like my channel. I see you're definitely not off, for sure. Let's see. I can't tell if you had that connect. Yeah, you didn't have that connected. I think I think it plays right into the hands of what we're looking at here, and it's true all the way down. So that's a little bit of a harder one, I have to admit. Great, great job. Tap tap. You could, yeah, bring that down to show most recent price action control, and then you would expand it if you were to break up, which, yeah, you're at the floor. So all right, Raf, let's speed this up a little bit. Weekly. What the fuck is going on with your chart, my brother? Hold on. Am I having a stroke right now? Do you have like? Hold on. Is anybody else seeing this? Damn, your candle's fat. You got some fat ass candles, son. Big fat chunkers. This must be volume based. You got volume based. What do they swell? And the volume gets all strong. Or American candles. There you go. Is that an EVA? Oh god, just ignore that. I'm just kidding. That's the weirdest thing I've ever seen in my life. That's crazy. Huh. I had nothing to say. I mean, I'm not saying it's wrong. It just looks fucking weird. All right. No, you're fine. You're fine. That's just interesting. Okay, so Google Weekly. Now, I'm going to tell you right now, I don't know how I feel about that chart. Okay, but we'll figure it out. Yeah, dude, you have, I think maybe you went off of the inner channel there. It looks like you might have. Hold on, let's see. Okay. So you had to have. Okay, so that's what you did. So I don't blame you, right, for doing that. Let's explore, right? It's not wrong until you use it the wrong way. So there's something there. And there's something here. So, hmm, I don't know, man. That's a tough one. I feel like the one that I dropped right here is probably our main control. Fuck. Got me stumped. Okay, let's do this. It's on stump. We're going to do it by finding more points of contact. Okay, so we got more here. And then it just dissipates. Again, I'm going to explore one more time. Still good. Damn. So there is a I mean, it's just not, we're not really seeing a whole lot of cohesion. So I think I can't really say that what you did was a bad job because, you did go with the inner parts. On the weekly, I typically try to zoom out to find like a base or something. But based off of points of contact, I feel like this is probably our best bet, right? But you know what? That one would probably give me a bit of trouble. So I think the better question is, would we trade it? You know? All right. So you get a Google 24-hour too. Yeah. So maybe that's the channel that I'm seeing on the 24-hour bleeding into the weekly. But that's good. Yeah. Good points. Good points. Good points. I like that. Google. God, that is fucking weird, dude. That's some real psychedelic shit. I feel like that's what my chart would look like if I was on acid. Um, I would not be cutting out your wicks. Leave that in. Let's see. Set the 15 minute. Okay, let's see what you did. Oh, we're gonna find it though. I don't like that either. Hmm. It's there. I could fucking feel it. That's a weird one, dude. Google seems like it's fucking just weird, but it is also in a downtrend, which I think is where control is at. So charting the uptrend, a little weird. Let me start with like the classic channel. That's it. That's the channel. What did you have? Yeah, I guess give or take. Clean it up a little bit, but otherwise looks pretty good. Sorry, I'm not looking at the chat the whole time while I'm doing this. I can only see the charts. So, all right. Hey, almost done, guys. Just a few more people. We're almost there. Lori, I already see what you did. Fucking awesome. Lori has all the points of contact marked out. Looks good to me, dude. Yeah, I think I had something similar. Controls there. Shrink that down a little bit, but yeah, I mean, for what I can see here, I mean, 15-minute on Tesla. Just want to make sure. I'm not saying good job. You did a bad job. Let's see. This is actually the channel I'm playing. That's the channel that I'm playing right now. Now, I think what you are identifying, right, is a channel that already broke. See that? And I think that's what somebody else had posted too. That's the channel that already broke. God damn, I want that price target so bad, guys. If I'm hollering tomorrow at 310.50, don't mind me. If we get down here, I might be like inaudible. Might be just making caveman sounds at that point. That's what I want. All right. Let's see here. Sugam. Sugam. Am I saying your name right, brother? Sugam or Sugam? Help me. Sugam? Okay. I could imagine some redneck down here trying to pronounce your name. Sugam? Oh shit. Scrolling on the wrong one. Okay. All right. So yeah, that was a 1 minute uptrend and it broke. And it looks like it broke down. So pretty good job. Yeah. Look at that. Little 1 minute trend breaks. These are all tools that you can use. That's good shit. Let's see here. What's this? Yeah, good point of contact. You're in an uptrend. I'm sure this is probably rooted in something higher, but yeah, that looks good as well. Some good points of contact. Now that's interesting. No, I guess I really don't have anything to say about that either. You got, you do have the potential to expand, but you tap, tap, you got all your taps, and now you break. So yeah, damn, good job. Oh, no. And then, oh, okay. So this one's going to be interesting. Now, you guys, let's have a little fun because this is one of my favorite things to do. Hold on, where did this Reddit Weekly? Yeah. All right. So what did I just teach you guys about when it comes to wide fluctuations in price? Let me show you. Wide fluctuation in price trend. Wide fluctuation in price. Uh-oh. Did we just see Reddit's trend built for the rest of eternity? I don't know. Ugh, damn. Hold on. Rock with me. Ugh, damn. So, one could, right? And here's what I would love to see. I would love to see, and this, well, first of all, Reddit has the potential to go up here. If I have it my way, even if you do go up there, you come back down, you build. You come back down, you build, right? Long, if you're going to make a big ass trend like this, it's going to take a long fucking time. This is January 2026. And then, right, you would likely start some sort of journey. But this could be, you could be very well. This is how I use this tool, right? Especially on IPOs. Let me see something. Now, it could be that Reddit does this and that wide fluctuation in price and potential trend. All trend is potential. So that potential, although still there, because you lose that trend is no longer a thing, right? However, I don't think so. Yeah, you really don't have enough points of contact to go off of this. Yeah, you could. No, no, no. You could do target based leaps. It would just have to be, I mean, you'd have to be a year out for something like that, you know? And if the market saw some sort of meltdown, that would be worth paying attention to. So, okay. Ooh, oh shit. I don't know why I skipped over that. All right. For some reason I jumped charts. All right. Lori, first of all, thank you. Love that. See that? That's how you get extra. That's how you get brownie points. I don't even know if you like brownies, but that right there, nice. So, two things, Lori. A, yes, bottom, good. But see that wick? See that wick? I'm betting they likely connect. Even if it's just that green candle, I'm betting that's likely where that expansion happens. But other than that, yeah, very good. Now, yeah, There you go. There you go. Beautiful, beautiful channel there. Great job. Good points of contact. Easy to see because you drew little orange circles around them. Not just playing. But seriously, yeah, great job. And then now, look at that super confluence right there. If you have a horizontal level that would intersect with that, even better. Good, good, beautiful, good. We're using the same chart though. That's good. Yeah, that's good. Yep, you got it. It's perfect. Yep, do a good job. Yeah, you got to trust your charts now. You got it, Lori. I need to see some racks. You and Peter. Peter. All right. What do you got here for me, Blue? Stop it. Oh, man. Oh. All right, there we go. All right, Blue. Got some floating in here, right? I'm not really seeing a ton of clean. I mean, I see it, but it's just, I mean, look, you kind of stretching to what is that coming off of? That's the only point there. That's the only point there. Then you really haven't touched anything else. So now this was 24 hours. So is that RTY on the 24-hour chart? Clearly zoomed in, right? Yeah. Why does your chart look so different though? Oh, I'm on the weekly. Good heavens. Okay, there we go. All right. So this one's going to be tricky, right? Because one could say that you really don't have a lot of points of confluence here. And this is where you might have to use multiple time frames to try to map this out, right? Now, already I'm noticing a little angling right there and right there. So I have two pop, pop, bam, and then right now pretty cohesive. Which, man, I tell you what, looks good. It looks good either way. This looks good. Yeah, it's happening soon. Up, down, doesn't matter. So anyway, that being said, going down to that 4 hour, probably a little bit more helpful. And then, like I said, you are cutting that wick out a little bit, but I'm gonna shrink this down like that. There you go. So I'd like my channel to look a little bit more like that, so a little bit tighter. And this is an example of, yes, a wick that I am excluding. Why? Because price is telling me to do it. How? Because it's showing more points of contact than what that wick provides, right? If I drop this up on the wick, I'm floating. Now, it isn't super relevant now, could be later, but as of right now, no. All right. Brian. Rivian. Good job. Like that, like that, like that. Double tap there. Perfect. Also perfect. Hold on a second. You were doing this in class, weren't you, Brian? I see that. You too, Blue. Mm-hmm. That's all right. I'm glad you did. And so yeah, this would be also very accurate. So good channel. Now this should be fun. Woo! So yeah, this is something that I don't have any points of contact on the bottom. So this is how, right now, clip it, record it, write it down, Morse code it. This is how I'd find my target, right? So like you could see here on the 24-hour. Okay, well, if you zoom in a little bit further back, where the fuck is this at? April. Okay. Ah, that's why it doesn't make any sense to me. Okay, well, let me show you this. I think it started from here. No, that wasn't it. Or was it here? That was it. That is it. That is Rivian's trend. Period. So when we're on the higher time frames, right, it is okay to go zoom out and try to explore where that support comes from. Now, what I was going to say is that's how I could find a complementary target, but the fact of the matter is if you're doing that correctly off the tops as well, right, that still would be. So that's how I would pick a target to the downside, which would be right around there. There. Oh. You guys ever have like it feels like a rib pain? It's like super sharp. Like happens once a year. Makes you feel like you're about to have a heart attack. Got scared there for a second. Random ass fucking piercing pain. All right. Then you got your weekly here. This is the last one, guys. I like the points of contact, but I would say it's a little loose in terms of you gotta. So let's say this: when something is continuing to follow the overall trend that's derived from whatever time frame, that is the trend, right? So on Rivian, when I look at this, you're kind of pulling. I mean, yes, I do see the mouth, the wide fluctuation in price, and this could be true. But what you would also be excluding July. So see that right there? You can't run that off of nothing, like, or just try to run it through that. I typically am going to start off of it, right? Even if that means it doesn't work, but hold on, it does. So, and this could be the potential downside continuation to the look at it. It's perfect. But I also could take that and, right? Nice. I think that's about as far as I would need to take it. Yeah, I don't see any use doing anything else. So, all right. Thank you for everybody who did put in their homework. I might have missed. Okay, cool. I've got my best man on the job. I wanted a hard one. Okay, it's a little out of context. Oh, okay, I get what you're saying. Don't put me in timeout. I had to work during class. Are you okay, man? I mean, I appreciate you grinding, dude. Everyone past the age of 30. No, if there's some 20-year-olds in here. How many of you guys are 30 plus? 25. Can't even listen to instruction. I'm just kidding. Man. All right. Ivy, you're not 23. Quit fucking lying. She could be whatever she wants to be. All right, look at Ivan, RJ, Philo, young cats hanging out with with the old people. Okay, Junior. You look healthy, but wife, okay. Okay, cool. Yeah, so we're all about the same age, in our 30s. I'm 33 though, so listen, Ivy's married, guys. Leave her alone. She's married to the game. Also, I cannot have any Americans marrying her because then if she still wants to work for me, I got to pay her an American salary. So please wait to try to make Ivy fall in love with you, okay? Paperwork takes time. Oh, man. Anybody offers Ivy a green card, dude, you're banned. Sorry, Ivy. Capitalism strikes again. Oh, man. Get Ivy the gold card. That's crazy. That's wild. Yeah. Can't fight that one, can I? This is part of the recording. Shout out to everybody watching this in the future. Hopefully, if you're watching this a few years from now, Ivy's not married to one of my students. All right. I'll do it for a lifetime Potter box. All right. Cool. So we got the homework out of the way. Does anybody else have any questions regarding that? I hope that was helpful. I figured doing it in live and walking you guys through those channels and how you build them would be useful. So my dad is a few weeks from 98, so I'm working on developing a lifetime income strategy. Wow. Yeah, dude, you might have 50 more years there, dude. All right. So I think the last time that we talked, and we're gonna go ahead and do our gap ups and gap downs, and then we'll go ahead and call it a day at 2 hours. The fuck you even talk? Yeah, I was about to say, dude, that was terrible. All right, so let's do that. Okay, now it's a little bit move. We're moving on from the channels, and just overall, pretty good job. I think everybody, if you keep doing that and you're repetitious with it, a month, month or two, and you'd be good to go. As far as tracking trend. So next, we're going to talk about something that a lot of people miss out on, and that's the actual open, where that 24-hour candle opens. Now, before I move on, that 24-hour candle means the 4:30 open. Where does that candle open? And so there's actually a signal, right? A lot of the times you can wake up, and if you're somebody who, and this is why one of the reasons, you'll come out of consolidation, you'll gap down, you'll come and tap the gap, and then you'll flush. And where you open on a 24-hour chart is incredibly important and can dictate where your trade goes from there. So the way that we do this is by obviously looking at 4:30 or at towards the open, where that bottom or top of that red candle, bottom of that green candle is at, and what is above and what is below. Where are you opening up? Gapping up or down above and below levels sellers or buyers control gives us a key indication on future movement. By gapping up over a sell wall, pushing sellers out and is a squeeze setup. Typically over 3% is the rule. All right, let me read that again. By gapping up over, or excuse me, by gapping up over a sell wall, pushing sellers out, that is a squeeze setup. Typically, a gap up over 3% overnight is the rule as for a gap and go. It's not the law, but it is a typical, like, okay, now you have a good chance. Why? Right? Can anybody answer that? Why do you guys think that a 3% gap up would or gap down would provide a continuation play? What do you guys think that's doing in the market? There you go. That's right. There you go. People have to cover or people have to sell. That overnight price action instills fear in typically the other direction if you're going down, or upside where you're pushing sellers out overnight. By gapping down under buyers, right here, it drives you to your next support, which in this case would be cost basis, but Tesla's doing Tesla shit, and it flushes straight through, right? And one of the ways that I avoid unnecessary trouble is that what I'm telling you guys is the reason why, right? Is the reason why when a candle opens up, first red candle, candle opens up in between. Take a look. In between that close, I'm not doing it, right? But I'm also considering this, all of these candles right here to be that range. So the way I look at this is that if that candle opens up anywhere, now here I did speculate on a potential move down, but we bounced off of something on a lower time frame, the gap, and we held ourselves up, which that could, what could have, oh shit, we are pulling back here in after hours. Yeah, this looks like a great setup to keep dumping. But when you get, it is harder to, so let's put this in perspective so everybody can understand. If I gap up in range, who is above and who is below? Buyers are below and sellers are above. So you're basically waking up in a fucking ping pong machine. And that is why I wait for a candle. Typically, right, there are certain things that will tip me off, right? Like counting the amount of times that you've held a floor, or counting the amount of times that you've rejected that top. Is this making sense to everybody? 1, 2, 3, 1, 2. Okay, we're heading down. We lost our median. We lost that floor that we were holding inside of that range here. We have a gap to fill. We're already going there. So if we break this, we would inevitably go here. But if price tomorrow, okay, for a live example, opens up right here, booby. If it opens up under here, I would expect for price to wick quick, dip quick, bounce sideways, pop up, go for the gap fill, go for the retest, do it fast, reject, come back all the way, bounce, and then move back down. Right? Now, regardless of that, if we open here, we go there. On the 24 hour, which is typically where I want to see this the most, right? Those gap up and gap downs matter. Let me show you an example. Gap up, open on cost basis. Move up to resistance. Open up in range, but outside or still above cost basis, you tap it and you leave. So you had cost basis above you, you opened up. What did you fucking have to get going? You wake up in the morning, do you leave without getting dressed? Do you leave without supplies or your wallet? Nope. You got to come back, you grab your shit, and you go. Let's see here. Okay. Now this is unfortunately, well, not for unfortunately, but this is actually something that I think the gap or the box is right here. Let's zoom in real quick. Very interesting. So you have two boxes stacked on top of one another in a beautiful thing. Okay. So let's take a look at this. First of all, there's your signal. Tap, 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 tap. Close. You moved up, you tapped, and you close underneath where sellers control the price. You open up under cost basis. You fill your gap quickly, right? That open bell. This is, again, write it down or say it out loud. Where the fuck are we opening, right? Okay, this morning I am seeing a open on the floor. I'm seeing an open on the floor. I'm seeing an open below cost basis on a lower time frame, which triggers, because one of my favorite things to get moving is a box that is actually separatable. I don't think that's a word. It's able to be separated into two boxes, right? What this does basically for me is allows for me to see a future catalyst that will basically add double the volume. If this punch down says that it's going to make a new low, well, that new low is that box's cost basis, right? So it triggers again. Down. Open up underneath the floor, you move down. Now this, what I'm teaching you is talking about the open. The potential to go wherever is fine. If you open up under where sellers control the price, they're going to pull you back. If that's the top of a box, then it's cost basis. If it's above a box, it's whatever resistance is outside of that, which is another reason why we repeat what is above and what is below. Everybody following me here? Good to go? Mhm. Yeah, I saw that, Alex. And listen, look for that every time. You know what I'm saying? Like that I can actually, I haven't done it, but like I can remember, you probably have heard me talk about this. That's weird. Some of you are yellow and some of you are white. No, just kidding. But I can actually, um, I can think back to almost, I would say like 60% of the day trades I've taken on the ETFs in the last year, and the majority of them look like that. 3 off the top and 2 on the bottom. And I wish that one day we'll have an AI that'll fucking be like, ding, ding, ding. Like, this thing is firing off. Look at that. But until then, dude, no, I have never seen it not work. Brother, I had told this man that I was teaching class and because he was trying to fucking get me to help him. And then he calls me in the middle of class. It's beautiful. All right. Okay. So by gapping down under buyers or under a sell wall drives you into your next support. So if I opened up under that floor, I would be driven to my next support. If I was moving back up and I gapped up over the top of that box, I would be promised a move up. Now, one thing, this is a little side lesson. If you gap outside of a box and you have a box directly up above you with a little bit of empty space in between the two, get ready because you're going to fucking chop likely in between the two. That's like a 9 times out of 10. Daily gaps over key levels, 24-hour gaps over key levels, bigger moves, right? So if you get a big gap over a large level or up on top of a floor, bigger move. 1 hour and 15-hour gaps in range are playable, but cap your range, right? So like little tiny gaps. This is noting the reaction of the stock at the bell, right? Not the moves following. So you have to deliver, like if you were opening up on Tesla, the promised move is to cost basis, which is here. But what happens there is determined by you're watching it. Today on Tesla, I watched how it performed every time it hit a floor. We dumped fast, we retested fast, we built a box, and we fall. All right. Now, this is something that you can do once you've gone and looked at the 24-hour, right? And this is, I would say, something that's more or less built for range, because what I'm teaching you on the 24-hour, say you gap down in range and you are somebody who is a day trader, and I have to address these people because they are here. If you are a day trader, gapping down underneath your nearest support or the support from yesterday inside of that range will typically drive you down to the bottom. So Tesla is operating in the range from here to here. This is yesterday's floor. You gap down underneath it, right? Not to mention this right here is also lost and allows price to move fluidly. There is no real structure. So you go and you hit that floor. Now, again, I'm not encouraging you guys to go and trade in range, but gapping down to support or just above it will lead to a fake out as the stop will drop to that support, bounce for the gap fill, gapping up. So gapping up to support or down to support or just above it can lead to fake outs. What am I saying by that? If we were to gap down right here, right, hold on, let me erase all this. If we were to gap down right here, this is where a lot of people get caught. And this is where, if you are too focused on lower time frame setups and not focused on what the higher time frame is presenting to you, hourly, whatever, if you have a floor here and you have a ceiling here, there is a good now if you're patient, you can catch it. You'll wick up and then just wick right back down and then bounce and then go and reverse the second half of the day. And I know a lot of you guys have seen that. So when I see something gapping down in a weird space, don't touch it. I don't touch it. All right, now this is kind of off the kilter, so I'm not the most important thing in the world. Okay, so here's an example of a gap up, right? You had a box here as well, where the cost basis there. You gapped up, you punched through that overnight, you opened up on top of cost basis, and you explode. Some of the largest moves off the bell come with a gap up above the 50% mark. Can we think about why? Right? Not only are you displacing so many sellers with an overnight move like that, but you are also gapping up above where the majority of the volume is at. So not only do you get the volume push, you get the squeeze. And this can typically lead to large moves up. Okay, now in this example, what you'll notice here is that I have a box, right? And I have to go with my points of contact. I don't know who drew that box, but it's trash. That box should be shrunk up a little bit. That being said, right, because we're sitting on top of those candles right here. That being said, the resist, and this is actually this is where some people get caught. because you'll build a box and it will have wicks outside of it, right? And those will be the actual new high. So while you close here and then gap up, you gap up to where sellers had rejected the price previously, and that is only typically promising a retest of the top here. That initial move ends up driving you down for a punchback. So if you gap up to resistance, now I'm going to see if I can find it. There you go. I'm going to try to find you guys a play that I had taken. And I remember, yeah, it's a gap up to the 24-hour floor. And you ended up dropping immediately. There it is. Found you, little shit. What are those? Oh, okay. I think that's it. I can't see it on the 24-hour. I don't like that. Okay, so let me just show you the best of my ability here. It's clear on the 4-hour. I still don't feel like this is the one. Okay, so to my left, I have structure, right? And I have 2 wicks coming off that floor there at 281. So coming out of a base, real nice, right? Beautiful base, reminds me of Starbucks. You get your first candle up, right? Now this is where I'm struggling because I'm not exactly sure, but this is going to bleed into my next example. You just gap up, right? You're gapping up at yesterday's close, and the first immediate reaction is to move up and fill that empty space. Now that's right at the bell, and then the next day you come back for that retest. But there's actually something interesting over here to your left. See that? Do you find newer traders play longer expiration contracts? No, I tell newer traders to do that. So yeah, I mean, I would if you're new, buying shorter the goal is to get the mechanics. So rather than paper trading, if you could find a contract with a good expiration for 4 or 5, or a month out and it's under $30, like that's a good opportunity. Because if you're new, you should be playing the highest time frame, which is the slowest. And I mean, you do have to wait a lot longer, but ultimately, yeah, you don't need to be dealing with really volatile contracts until you're used to it. Okay, so everybody sees this, right? This is actually just a great example of my strategy in a nutshell, but the gap down, 1, 2, right? You punch, that's clearly a box. You close underneath it. Look at that last candle right there on the 24-hour. You pop up, you can't grab your floor, you close underneath, right underneath the wicks, you gap down. You gap down under where sellers control the price. The immediate move is down. For that example, where would I enter? Well, if I could acknowledge that that price was opening up, I would try to play a rejection off the top. That'd be my first intuition. But let's go over here. So in this example, where would I try to get in? I mean, I would try to situate myself somewhere in that range. Now it looks like you end up building a box. So when you ask me that, right, I'm not in that moment right now. But if I could spot that box, which I probably would have been able to, right? You have that first initial leg down. If I would have gotten the rejection, I would have been safe. But because this is a 24-hour punchback, I would be expecting to take a longer expiration. Because this is, especially when you gap down and just flush straight through the box, you're going to retest that cost basis to grab the volume you need to continue moving down. So I would more than likely have used the box that you see right there on the 2 hour. So see if we could find any other examples here. Okay. Got an example for you here. Now, this is also a absolutely gorgeous, borderline sexual setup to show you guys what it is, what it is that I am looking for. If it don't look like this, don't talk to me. I don't want to see it. That should be your attitude. If it doesn't make sense, if it doesn't, but this is clarity to the fucking max and shows you why what I teach you guys is just how market mechanics work. If you can find empty space, your target, right, even if you entered late, is point A to point B with a trim here. Bam, bam, bam. All empty spaces filled before you completely fucking go flat for an extended amount of time. Big pop up, destroy the contracts. We traded, I actually made a huge video on this because not only do you end up building a new box here, you end up building a box right outside, right in the upper half. And that look at that right there. Now hold on. Garrett, you're tripping balls. Check this out. Candle opens up against cost basis, pops up, gets ripped back down. Candle gaps up above cost basis, and you fucking rip. You rip. But here's another, just to reflect back on this. You gap up, you close at cost basis. Next day, you're red. You gap up above it, plays on. That is by definition riptic. Trying to find more. Okay, so here's a weird example, right? First of all, this is your cage, right? You gap up. You close at the floor you lost. You gap up. You move up. You hit resistance. You fall. So by gapping up above the floor, you know you're going to hit that. You're going to hit the whatever resistance you have above you, and then you're going to decide. So everybody following me here? Okay, here's another example. See the wall? See it? Control. Look at the open. So you guys can see how impactful. Look, gap outside, right? Up. Gap down below, down. Gap up above, you're gone. God damn, I love this shit, guys. And here's the biggest issue. Do you know why people can't do this? Because it sounds so simple. But you know what you had to do that? Fucking wait. You want to take it here? Hold on. Gap outside. right? Even that last wick, gap outside. Patience, patience, patience. An example of that is like with snow. Yeah, I took a little position today as it's nearing what I consider to be max tension, and that's that's strategy. I'm doing a good job with that, but that's something that I would expect for snow to gap out. Snow is likely going to tell me where it's going to go by gapping up. You gap up above this, we're going up. The first resistance, 217. You gap down below this, well, unfortunately, it's just 204. If that breaks, if you gap down below it, 199.76. If you were to gap down below 199.86, you will fall. So it's like if I strand you in the desert, you're going to run towards the oasis, towards supplies, towards survival. So when you open up and you have nowhere to go, or you open up and there's a gate right in front of you, right? That's blocking all of the supplies. It's just like you're going to go back. You're going to gravitate towards where volume is at, whether it's up, right? You're going to rush towards structure, or down. You're going to rush towards structure volume down below so that you can potentially A, bounce or move higher or move lower, excuse me. So here's another example, right? You close up against the first floor. Now, I will say it's a pretty damn good job from, and I'd be curious to see how that actually responded. So you just fucking rip right through it. Now you have a little gap right there, and that definitely is where that candle stops. But you rip right through it. Yeah, I don't see any resistance at all. Just a little stutter step as you move into the lower time frames. But if you gapped up there, you are still, by definition, above buyers. Now, you didn't even come back, right? So you actually just ripped straight up and moved through that imbalance. Now, for an example here that has not happened yet, if you were to gap down underneath 116, easy retest. If you gap down outside of 120, you have an immediate resistance. It's only 121. And that's important because when you gap outside, it's like, oh, upside. Hold on. What's above and what's below? Same shit that we keep repeating. What is above and what is below? And where did you open? Starbucks. Hmm. Well, here's a good example of you can't really see it, but look, you gap down in range, you tap up to try to fill your gap, and you just sit. Now the following day, you open up below off of a retest. I think that's an imbalance, and you end up going up and trying to fill that. Fail, and then today you gapped down under the floor that you established yesterday. So definitely a useful tool. Okay. So here's a few more examples before we go ahead and call it. NVIDIA, right? I have a support right here. You have a box right there. You gap down to support. Now, this is one great way to get fucking fried. And I have seen it many, many times where I swing short and I say, we're opening up at the floor. So if you hold, you have to know that you're going to bounce. And if you bounce in reverse and reclaim this, you're going back up. So a lot of the times, if you've made the majority of the move overnight, forget about it. It's point A to point B. And if point B has been hit, even if it means it bounced in pre-market, you might as well just fucking bite that bullet, especially if you're green. So here's another good example. A gap down under where sellers control the price. immediate down. Also, there's no video right there for that example, right? You gap down to the floor, and that will be, it's hard to remember in the moment, that will be some of your strongest and most, I mean, it's literally like opening up and immediately, like people see that. You're not the only one. People see that. Everybody, right? All of that volume that's sitting there explodes. And what is above you to stop you? A gap. That doesn't stop shit. So you're going to rip through it. Now, again, these are tools. And you might find yourself in a gap down where all of a sudden you're going to be reminded of what I'm telling you now. If you gap down to a floor, and that could provide a really, like, let's say you're long short, you got another 2 months left on that expiration. Well, you gap down to a major 24-hour floor, and you can find shorter expiration contracts to play that bounce, or to play something like NVIDIA, which gives you a punch back, right? An empty space above it. You can do those things in order to protect yourself. If you know where you're at, if you can navigate that, then you can hedge. Or, okay. All right, that'll conclude today's class on our gap up homework and gap up and gap downs. Thank you for already labeling that. So we'll go ahead and if you have any questions, go ahead and drop those now. But otherwise, if you have any, if you don't, that's fine. We'll tackle those tomorrow. But I hope that the homework, going over the homework, was useful. And then again, this is what we just covered tonight is going to be a really powerful tool. Yeah, we're going to learn entries and exits. Yeah. I think what I'll do is I might even use the futures things for that, but like I might just trade futures to show you guys. So tonight's homework, I didn't have anything because today's lesson is continuing from last times. I don't want to give you gap up, gap down homework when, I mean, I can. Tomorrow's the next class. Wait, yeah, tomorrow. We might take a break on Thursday. So can you start from the beginning? Oh, it's okay. It's all right, Jesse. It's all recorded, man. Yeah, you could. Absolutely. Sure. If you guys would like to, it's not, voluntary, but if you'd like to go and try to find some of examples of what I showed you tonight of price exploding off of a gap up or reversing off of a gap up. I was trying to find this example on Tesla where you gapped up literally to the floor and immediately flushed. I understand. So go ahead and do that. Maybe 3 or 4 charts, 24-hour chart would be preferable. If you want to write that down, Ivy. But otherwise, you guys have a wonderful night, and we'll see you in class tomorrow and tomorrow morning. Yep, no problem. All right, have a good night. Bye, guys. Thank you. All right, bye.